Nike is down over 30% year to date and close to 18% in the 5-year mark, diminishing most of the gains for shareholders. The iconic brand had their earnings and the results were not the expected one. Full-year revenues were $51.4 billion compared to $51.2 billion in the prior year, up 1%. Fourth quarter revenues were $12.6 billion, down 2% on a reported basis. Nike direct revenues for the fourth quarter were $5.1 billion, down 8%. Wholesale revenues for the fourth quarter were $7.1 billion, up 5%. Gross margin for the fourth quarter increased 110 basis points to 44.7%. So it looks like we have a mixed earnings, so we will expect for the stock to remain flattish, right? Not necessarily. When we invest in companies, as investors, we like to know how the company is doing today, but most importantly, what it's going to do in the future. In earnings terms, that is called guidance, and Nike reduced their guidance for 2025 and below Wall Street expectations, causing banks and Wall Street itself to downgrade the stock. The company now expects fiscal 2025 sales to decline by mid-single digits, reversing the CFO comments from the March earnings call when he said sales will inflect in the second half and growth next year on the top line. For its fiscal Q1, management is guiding for revenue to decline 10% year over year, with the first half down high single digits. The company blamed challenges in its direct business, a weak wholesale order book, a softer China, and the aggressive actions it is taking to manage its classic footwear franchises. That sounds like almost every segment across Nike is experiencing issues, and these issues are spread across multiple geographies as well. On the bright side, the company is looking for a gross margin to expand 10 to 30 basis points for the year, and its inventory position looks pretty manageable. This should not be overlooked because when apparel and footwear companies run into sales trouble, it can often be exacerbated by inventory and gross margin woes. Okay, so having mixed earnings combined with a very bad guidance causes the stock to plummet. Let's digest Nike's current problems. The first problem is Nike Direct. When we were in lockdown, online sales skyrocketed and Nike took advantage of that. Selling online merchandise allowed the company to continue increasing revenue. It seems consumers are pulling back this time, and it could be for several reasons like the economy, people are trying to save money, competition, other brands offering better products, or simply consumers are not liking the brand anymore. This probably caused the revenue to drop over 8% for online sales. Next, we have wholesales expected to go down. Despite going up in this fourth quarter, management is expecting a slowdown in wholesales. This is when Nike sells to the retailers so they can resell the products in their brick and mortar store. So if you put this into perspective, these are the two ways for Nike to sell their products. And one of them is currently down in revenue, while the other one is expected to slow down in 2025. This must be fixed ASAP. Next problem is softer China consumption. China is 13% of Nike's revenue, so it takes a huge portion. A slowdown in China affects drastically. Next, less sale of core products. Loyal customers who shop on Nike's website are no longer springing for the new pairs of Air Force Ones, Air Jordan 1s, or Dunks. Could it be that these iconic products are past their prime and consumers are opting for new, fresh, and up-to-date styles from competitors? It could be. And last, loss of essential customer. Post-pandemic, the rise of people doing running clubs, marathons, casual running, and so on has been on a rise. Nike lost touch with that core audience and did not do the marketing, innovation, and diligence to retain the dominance in that sector. Companies like On and Hoka have chipped a huge portion of the market share in the running section. Nike's management needs to step it up. When your largest revenue segment is footwear, you need to be on top of your game consistently. Footwear alone is so big for Nike that the other three revenue segments combined is not even half of what footwear is. So Nike needs to step it up in marketing and innovation. They already have the brand power. Personally, I have used their footwear, but never have bought clothing from a Nike store, and that is because of the price. So I think Nike can tap into their clothing segment and increase their revenue by offering deals. Now, fundamentally speaking, the company is doing okay, growing revenue, a growing free cash flow despite being a cyclical company, increasing dividends, high ROCE, reducing shares outstanding, increasing earnings per share, and the company has more cash than debt. So I do think that Nike can turn things around. Management just need to be more intentional with their decisions, adapt to the new trend, innovate, rinse, and repeat. The company already has the brand power, but don't know how easy it will be to attract customers back since the competition is good as well. Talking about the stock price again, is this a good time to buy this company? I'm not giving recommendations, but what I can say is the stock is already beaten up and it can possibly go lower due to market fluctuations or more bad news from the company. However, I do think that the 2025 lowered guidance is already baked into the price. So from here, any bad earnings could leave the stock flat, but if Nike's numbers improve, it could possibly go up. The main focus should be the fundamentals of the companies. Are they improving or deteriorating over the long term? From there, as an investor, you should know if it's a buy or a sell. To close this video, Nike is being sued. This applies for investors who bought the stock between March 19, 2021 and March 21, 2024. The complaint alleges that during the class period, defendants issued materially false and or misleading statements and or failed to disclose that Nike's direct-to-consumer strategy was unable to generate sustainable revenue growth. Nike's purported competitive advantage were unable to protect the company from intense competition pressures after Nike largely disengaged from many of its wholesale and retail partners to focus on the company's direct-to-consumer strategy. And as a result, defendants' representation about the company's business operation and prospects were materially false and misleading and or lacked a reasonable basis. Personally, I think this lawsuit is absurd. Businesses do changes to the strategy all the time, and it doesn't mean it will work 100% for them. Yes, Nike's focused on their direct-to-consumer strategy and gave a priority to that tactic. Unfortunately, it did not work as expected. The company's brand and competitive advantage has been reduced, but Nike is still number one in the segments they compete in and still one of the most recognizable brands in the world. We also have to keep in mind that the competition is offering good products as well, so I guess it's all fair and part of the free market in this capitalistic economy. I don't think investors were misled. I just think the strategy did not work as intended. I don't see this lawsuit going anywhere and Nike will leave unharmed. So that will be it for this video. Thanks for watching. Subscribe and I'll see you in the next one.